I'm interested in, of course, what Powell had previously called mid-cycle adjustment, not the beginning of a long series of rate cuts. What is the market now anticipating? Because it hasn't budged in terms of still expecting 25 basis point cut come September. Where are you seeing the rate of cuts and the extent of them going after that?
Well, I think we actually are likely to see, and this is our forecast now it's really highly contingent, not that Brexit alone is a major event in and of itself, but in the context of the trade wars we're seeing and all the uncertainty we're seeing around trade situation. Their October 30th meeting ends on October 30th, and if depending on where we are, who knows where we'll be with Brexit by then, but I do think we could get that extra rate cut in October along with September. Now, if we do that with September, October, and December, we will have fully reversed all the Fed rate hikes of 2018 by the end of 2019. I think that is what the Fed needs to do, given the headwinds we do face, the uncertainties we face, and that tax. We're seeing hesitation by businesses, and what the Fed is trying to do is offset the effects of that uncertainty by shoring things up. Now, whether they can or not is another question. I think it's also very valid that Chairman Powell went out of his way to say, listen, when we get to cutting rates for a recession, it's going to be even more difficult because we don't have as much room as we once had to stimulate.